clearly the market has been going higher based on the massive amount of stimulus being applied by the Fed and the exuberance of the relaxation of quarantines. There's really, unfortunately, no correlation with market valuations right now. And we as a firm have maintained our fully invested positions really through the whole year. Yet investors who are having fresh cash right now, we'd be cautious about adding the full amounts of an equity exposure at these levels.
So this kind of brings back the idea of dollar cost averaging. So you would still be putting money to work. You just wouldn't be taking a full-blown shot at these levels. Do you expect a pullback to happen? And if so, how big would it be?
Well, I think we have to understand that in this type of a market, valuations versus 21 earnings are blown out of proportion right now. And this liquidity-driven event will likely continue. You can look back to 2000 to 2001. There's a lot of momentum here. Yet ultimately, in 21, we're going to have to deliver earnings. Our view is roughly 140 to 150 in earnings. It puts the market right now at just about 21 times forward. So it is an expensive market, yet that liquidity momentum will continue.
All right. What exactly then are your clients' biggest concerns right now? Is it an asset allocation issue? Is it which types of sectors and industries should I be involved in? Is it something where we just feel as though the entire market is still waiting on a COVID vaccine? And how do you navigate those questions?
Yeah, it's a challenging environment, really, from the perspective that an investor with multiple asset classes, let's say the average client of Treasury Partners will have roughly 20 to 30% in fixed income, roughly 50% in equities, and about 20% in hedged or protected investments. It's the fixed income portion now that will be yielding nothing going forward. So one of the primary questions for investors that are used to having income from their portfolios or their fixed income side, or retired people, how are they going to generate that income? And the sources of that are being diminished, and that's going to be really a burden on income receiving investors going forward as a result of the Fed policy.
Sure.
That's keeping rates down to zero.